Okay, welcome back. There's 15 minutes to go for the pre-open session. Anuj is here to run us through the trade setup as he sees it. Anuj, good morning.
Morning, Prashant. You know what? Before I talk about today's trade, there's some interesting patterns developing. First, let's look at the Nifty's chart. If it's ready, yeah, there it is. Now, this is a chart. Now, you know what you don't see here is a line that I had made, but that line is somewhere around here, which is 18,600. The 200-day moving average, also the point from where we had a big rally. So in that sense, 18,600 is a good point. And normally the first test of 200-day moving average is defended. Now, the other interesting point that I'm looking at is FI positioning at the start of a series. We are down to now almost 10%, 90% shorts. Last time it happened was in March 23 when we had an 800-point rally. And that was not alone. In the previous two instances, last year also, when FI positioning had reached about 85 to 90% shorts, the market had a big rally. Now, the history doesn't have to repeat itself, but in most cases, it normally does in stock market. So that's, I think, maybe a hope or whatever, but it looks like the market may be trying to create some kind of a bottom. The other thing is that yesterday, in the last hour, the market had some signs of recovery, especially look at what happened to the advanced decline yesterday. This is yesterday's advanced decline. If we had traded for half an hour more, this green line perhaps would have overtaken that red line. After starting with such a massive gap, we actually ended pretty close to being even Steven on the advanced decline. Look at the intraday charts of the mid-cap index and the intraday chart of the small-cap index. Both these indices actually had a smart recovery. Mid-cap index at one point was down 1,000 points. It ended with 400-point cut. And small-cap index actually ended at the highest point of the day, so 36,206, which was almost the high of the day. And some cash stocks recovered between 5 to 15% in trade yesterday. I'll just give you some examples. For example, take a look at BSE's intraday chart. That would come up for you on screen. And that stock actually recovered more than 10% and ended a day low, in fact, a day high. In fact, at one point, it was down 10%. There were other stocks as well, like Zomato, for example, or SJVN. But the limited point is that a lot of stocks, especially cash market stocks, did see a sharp recovery by the end of the day. Now, that's the basic sense of the last hour trade. In terms of today's trade, there are a couple of levels that I'm watching out for. First is 18,700 on the Nifty. That's put option based. And the bigger support is 18,607, which I just described as the 200-day moving average. Let's see. The first test is normally defended on the Nifty. On the Bank Nifty, that's an index which has become decisively weak. In fact, it's become so weak now that it's almost capitulating. And look at HDFC Bank, for example. Now, first support is 42,105, yesterday's low, but the next big support only comes in here at 41,500, and all rallies in Bank Nifty are vulnerable to be sold into.
Okay, absolutely. We'll watch out for those levels, Anuj. Thanks very much. We're still some distance away from the 200 DMA on the Nifty. So let's see if the bulls can have their way this Friday.